Okay, here we have Friday, November 1st, 2024. We're trading NASDAQ futures, 200 tick chart, and a MACD with the Trade of 8 platform's default settings of 12, 26, and 9, and default colors if you want to follow along. And we're looking to review the day and test the potential profit and risk involved in trendline trades and breaking of the trends. So here we go. Starting at pre-market hours, we can see around 8:30 we have a data point here and a next high that help us to establish a trend line. So we draw that down. As we come up to the trend line again, we're looking to sell here. And we set our pivot stop here at the previous high. We see that the stop is not triggered, and as we come down we break even and continue on and have opportunity to take profit along the way. As we come up again, we have another opportunity to sell here, and we could see that the trend line continues to hold. Next time we come up, we notice that the MACD is diverging from the price action in that even though we have a lower low here, we have a higher low here. So that indicates a possible break of the trend line. So if we're to short here, we want to be careful to set our stop at the break of the trend line. So in this case, we're able to take profit, but as we come up again, we see the break of the trend line, and we're on to our next move. So continuing from here, we have a break of the trend, and we can take a position here long with a stop at this pivot point and take profit. And then we're looking for a new high and a new low, which isn't known until we move upwards. And once that swing low is established, we can draw our trend line through these 2 points and continue along. And then as we see the price action move up, we see here there's not a new high established. But when we get down to here, it respects the line. And as we go higher, we establish a new high. However, this high on the MACD is a lower high, which indicates divergence, and we're looking for a trend break, which we do get here, and can short and take a profit along the way. Now we could be long here for a potential bounce to the upside, and we'd be stopped out at the break of the trend line. Then we establish a new position and short at the trend line with a stop here at the pivot. We take profit as we can along the way, but as we're moving down, we adjust our stop to break even, so if we miss the opportunity, we're out without a loss. Now, ignoring this trend line for the moment, notice how ill-defined this movement is here, with no distinct highs or lows. But as we begin to move down here, we see a swing low and high that allows us to draw another trend line. Upon the next touch, we short with a pivot stop here, adjusting our stop to break even after about 10 points gain, which would be triggered by this movement here. Now we have a trend break, and we're long here with a stop down here that gets triggered along the way. A new trend line break begins, and we're long here with a stop at this pivot. Having many opportunities to take profit along here, we note this swing low, and with this point, draw our new trend line. Returning to the line here, we're long with a pivot stop here. Now, we do see it come down to the trend line again, but we are at 9:55. There's an economic data point coming out at 10 o'clock, so we don't take a position until that settles down. Now, as we were going through this day, we actually did connect this point at 9:36 with the previous low right before the open, and extended that line throughout our day. So here we are after 10 a.m., and we stayed out of trading, but connected valid highs on this downtrend to form another trend line. The trend is broken. We take a long position here with a stop down here, adjusting the stop at break even as the price moves in our favor. We don't know that this is a valid low yet until we breach the high up here. Then this gets connected to here, and we have our trend line. Okay, now we come back to the trend line. However, the last pivot point is too low and the risk is too high for a stop there. So we wait. On the next opportunity, our risk is acceptable, so we take a long position and take our profit here. So now we're up here, having taken profit here, but if you notice, we have a new high, yet the MACD shows divergence, a lower high, so a potential breakdown, which occurs. Now we could have gone long here with a stop at a breakdown, or we could be short here with the risk up here. Profit could be taken throughout here, or the stop could be moved to here, which would be triggered once we go through this move. But as we move up here, we see that we have enough points down here, swing lows, to create a trend line. Moving along here, creating new highs, we come back to the trend line, going long here, setting a stop based on this low. And when we get to these highs, once again we're warned of divergence from MACD, as you can see. So going long here, we would set our stop close by in case of a trend break, which we get once again. So shorting, we set our stop here, move it as we go, take profit somewhere, we get a new high, and draw a new trend line. Now, one could argue that this trend line could have been drawn based on these 2 points, making this point in play to short, with a stop set up here, which would have been great profit. But there's this long position you could have been in, short position. There could be other things you're preoccupied with before you have an opportunity to draw this trend line. These things move fast, but it's possible. But notice how this big drop goes right down to the long-term trend line that was set from the beginning of the day. It's finally in play, and it actually takes a big bounce off of it. Now, you could take a long position from here, but that's quite a drop, and the last pivot point from here is so far out of view that the risk isn't even worth it. However, if you took a long position from here, you could set your stop at the break of the line, and in this case it would have worked out well. Moving on from there, you would come back to the line and you could have taken a long position here with a stop at the break of the line, and being stopped out, you would have had plenty of opportunities to get in for a short with a stop point up here and had a good chance to make out profit-wise here. During this time, you could have placed your stop at break even, and worst case scenario, you would be stopped out if you stuck around for this move up here. In the meantime, we notice these 2 points are good for creating a trend line for a possible trend break, and we notice that MACD is also diverging. We get long and we take profit up here. After we take profit here, we see this activity and we don't know what's going on, so we do nothing. In the meantime, from these data points, we draw a trend line and we just keep watching through this activity. We arrive at the line again, but the risk would be down here, so we don't take it, or we do take it and set our stop loss right below the line in case of a break of trend. Plenty of profit potential. Same case over here. In this case, we would be stopped out with the same plan. We're down at the line again. Take a position at the trend line. We got to move up and either take profit or move our stop, which would have been here, to break even. If we take the profit and we take a new position here, we have a pivot low here and we get stopped out with a very small loss. Once we get a trend break here, we take a position, our stop is at this pivot high, and we have great potential with many opportunities to capitalize on a short going all the way down. There's no new lines to draw here, so it's just a matter of discretion.